Good morning. Welcome to Stock Market Today for Monday, March 1st, 2021. New month. Hope everybody had a great weekend. This is Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider that hits your inbox every trading day before the market opens. So let's dive right into it. U.S. equities lower on Wednesday. They finished off the worst levels of the day. Energy was under some pressure, but still finished much higher on the week. Financials also gave back recent gains. It was all about kind of an undoing of recent trends, right? Fins and energy coming off, while tech, comm services, and discretionary were the only sectors to finish higher. Treasuries were stronger, with strength at the back end of the curve. So the curve flattener going on really since the October-November timeframe, it's been curve steepeners as far as the eye can see, with an acceleration last week that we and everybody else was talking about. 10-year yield closed back below 1.5%. Dollar was stronger on the major crosses. Gold was down 2.6%. WTI crude settled down 3%, but was still up about 4% on the week. Now, as we get to the desk this morning, S&P futures are rallying, as are NASDAQ and small cap futures. S&P futures up about 1.1% in early trading. That's after Asian markets rallied overnight, with Japan, Nikkei, and China's Shenzhen standing out, both up about 2.5%. Remember, the Nikkei was down 4% on Friday, however. European markets are seeing good gains as well. Treasuries are mostly stronger, with a rally in global sovereign debt, and that's what's been under pressure for a while now. The dollar is bid against the yen and euro. Gold is up 90 basis points. WTI crude is up 1.5%. So, be an interesting day here. It's going to be an interesting week. Earnings season winding down, so the macro is going to really be in focus. So let's think about the macro for a moment here. We have vaccines. We have stimulus. Okay, but largely speaking, those have not been surprises. So we've had the reflation, reopening, rotation trade playing out since November. Money flowing out of mega cap tech, mega cap consumer facing tech, things of that nature, right? Google's not a tech company, it's consumer facing tech. Same with, Amazon is a discretionary company, but you get my point. Money flowing out of those names and into the reflation trade, into the banks, into energy, into materials, industrials, right? Into small caps, into micro caps. What if there's a rotation now? What if there's a pause in that? The good news is we know the good news. We know the reasons for the reopening trade. It's not to say it still can't work, but I think near term, maybe we start to see a pause here. Stabilization in rates. Money flows back into growth a little bit. We get a rebalancing. I continue to think that a balanced approach to equity allocation makes the most sense. If you had a balanced approach last week, if you had kind of a nice even mix between reflation, reopening type stuff and growth, last week probably didn't hurt you all that much. If you were all in growth, last week was terrible. If you were all in reflation, last week was great, but Friday hurt. So it depends on where you want to be. You know you, right? I don't give advice here. I talk about the themes. Make them your own. I'll give you my thoughts on what I think makes sense, though. Let's dive into it. That was a little long-winded intro. I apologize for that. Major averages holding support, and we're oversold. We are at or near oversold levels by our Chaikin overbought oversold indicator, and holding support. In my opinion, the most compelling right now is probably IWM, followed by the Qs, followed by SPY. Qs, 315, 320, we're at it. We're there. We're in the support zone, and we're oversold. IWM, we have room to the bottom of support, but also oversold. I think IWM is interesting too because it's been the less volatile, right? So that oversold in an uptrend, and then factor in some volatility. IWM starts to look compelling. That's some proprietary work that I've done, and I funnel it through to my thought process here. And SPY, I mean, we've talked about it, right? I mean, we're at the top of the range. 370 to 380 is the support range, then 340 below that. So the trend is up until proven otherwise. And I think we're at the point where, you know, if you're not thinking about buying the dip, like if the past 2 weeks we talked about overbought conditions, so that was a time to be less aggressive, build your lists. This week is the week to start to put your list to work. My opinion. That's the framework for the major market averages here in the U.S. Let's chat about what we're talking about in our note today. Major equity ETFs in the U.S. are now at or near oversold levels. Well, I just hit that one pretty good for you. Treasuries are stretched to the downside and at key support. Now, we started to touch on this on Friday when we did the copper to gold ratio with the 10-year. We said both of those are stretched, right? That's kind of an extension of this cyclical rotation trade. May need to pause in the near term. We started talking about that on Friday. What we're writing about here today shouldn't be a surprise to our viewers here. Gold breaks down, and we were at a support level. It looked like a compelling risk reward. It didn't pan out. And as I said, futures point to a higher open here today. Let's look at the major indices, power bar perspective. Dow down, S&P down, NASDAQ up, right? So a reversal of what we've seen. NASDAQ back to even, 20 to 20 bulls to bears. Small caps give some back. Look at the rip higher in bonds. I mean, we were stretched to the downside. There was no two ways about it. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. So I think the opportunity now is to start to pay attention to the oversold growth themes. I think the opportunity now is to recognize that your cyclical rotation, reflation, reopening themes are probably overbought in the near term. But your growth themes are probably oversold. So if you believe me, again, make it your own. But if I'm providing a roadmap that you find useful and you're thinking in a balanced approach, well, that balanced approach probably needs to get a little bit more aggressive on the growth side of the coin, depending on who you are, where you are, how you invest. PTC is a bullish stock, strong trend, strong industry group in software. We are now oversold with bullish money flow as we continue to outperform the broader tape. Okay, you can see the pullback here. Right, so we are oversold within an uptrend. We have a bullish stock leading the market that has become oversold within the context of its uptrend. PTC closed at 136.94, up 1.83% on Friday. We got a nice little pullback here that sets the stage, I think. We're above support in the 120 to 130 range. I think that sets the stage for an opportunity in PTC and names like it. Drill down on the software space. If you don't like PTC, take a look at some other software names. Let's take a look at the sector now. Sector tracker movement last 5 days. Last week of trading has been all energy all the time. Happy to say that we were in front of that one. We started to talk bullishly about energy back in December. So kudos to those who listened. Congratulations. You made money. Fins Industrials round out the top three. Comms, healthcare, REITs, materials, middle of the road. Staples, in tech, utilities, and discretionary. I don't draw a lot from this. There's a rotation going on. It's back, it's forth, it's ebbs, it flows. We're oversold right now. We want to look for our leadership. I think what's interesting is if you look at our views on relative strength, the growth themes are getting oversold, but they're also beginning to underperform. So we need to see stabilization here. The Qs, for the first time in a while, are actually small underperformers. IWF, large cap growth, small underperformers. So something to be mindful of. Industry and focus, space and defense. Past 6 months, been an outperformer, 22%. Very strong power bar ratio at 6-2, number 8 of 21 subsectors. Actually down 5 slots over the past week. Huntington Ingalls, HII, National Presto, NPK, and Raytheon, RTX, are very bullish, and bullish respectively. All three are holdings in a fund that broke out, checks back to the breakout level, is oversold. We have a bullish fund that's outperforming the market, is oversold within the context of an uptrend. If this was a stock, I would tell you I thought it was interesting. Nice little breakout level here to shoot against. Check back. All right. Tripped one of our signals, entering an oversold level. I mean, I think that if you're looking for ideas in the equity landscape, There's 6 bullish stocks in the XAR based on our 20-factor model that look compelling. If you don't have it, if you don't have the model, head over, take that free trial, 14 days. Join us. Take us for a test drive. Get the flash the ticker at the end of the show here. Taking a look at what's trending now. Yesterday's S&P 500 movers and shakers, gainers and losers. Etsy up on earnings, up 11.5%. Big monster move. Enphase upsized a green note offering. Investors like what they heard there. ENPH up 5%. Carnival, CCL, nothing company specific, to send that stock higher by 5%. Same goes for Starbucks, SBUX up 4.4%. Actually ticked at a new 52-week high. L Brands, earnings and upgrades sent that stock higher, up 4.4% on the day. On the loser side of the board, earnings out of EOG take 8.5% out of this solid energy name. UHS earnings, Salesforce earnings, those stocks down 6% and 7%. Freeport, FCX, just some profit taking here. Remember, I think that the cyclical rotation reopening, it's all the same trade, stretched to the upside. And Freeport, obviously, with their copper exposure, fits the bill there. So a little profit taking, down 5%. I mean, look at a chart of Freeport and tell me it's not entitled to take a rest. I mean, that has been a sprinter. You get a little tired after a while. If you're out on the track running laps and you decide to run a few hard laps, you probably need to dial it back a little bit. And that's what's happening with Freeport here. FRC, nothing company specific, to send that stock lower by 4.7%. So the 10-year is oversold at support. I'm using the bond. I'm using the ETF here in the top panel, and then yield in the bottom panel to tell the same story. And that yield in the bottom panel should look exactly like the one we used with our copper gold ratio on Friday, when we basically said the same thing. IEF, take a look at this pullback here, right? Spike into COVID, consolidation, rollover, 5,200 cross, right? All the stuff, right? And now we're back into support. Stuff is a technical term. You know what I mean. You're seeing it. Breakdowns, moving average crossovers. If you've owned treasuries through this, I don't know. Hopefully you learned something, because there were plenty of opportunities to not be in treasuries heading into last week. And we get a pullback to support that produces an oversold condition that coincides with a spike in rates into resistance. And here's what I wrote Friday in my note. The story of the week has been rising rates, lower treasury prices. Rising rates, lower treasury prices. And the impact they have had on high multiple growth stocks, right? Fine. We all been talking about it. 7 to 10-year treasury bond ETF, that's this, IEF, has a very bearish rating in our model. So not only was the technicals a disaster, but our model turned bearish like here. Pretty good job getting you out of the way. Fund tested and held the March lows, which are in line with some peaks from 2016 and 2019. On top of that, both from a 21-day perspective and a 200-day perspective, the Z-scores were less than -2. So more than 2 standard deviations below those two averages. Logical spot for the sell-off to pause. And that's exactly what we saw. That's exactly how it played out to a T on Friday. And now we were going to watch, see how things develop. Commodities at the same time are stretched, right? So you've heard me say the reflation, reopening, rotation, whatever you want to call it. Trade is overdone, overstretched to the upside. Here's commodities, DBC, overbought into a resistance zone. This is not to say I don't still like commodities. I do. I think this is a long-term cycle. But we're not going to go there in a straight line like this. Puts and takes, stops and starts along the way. This is a logical spot for that puts and takes, stops and starts to play out. Ideally, what you want to see is just a nice pause consolidation here above 16 that works off this overbought condition that sets the stage. And then you want to see gold here, but gold is kind of breaking down. GDX, the miners, steady downtrend since August, and the shift in momentum, the RSI has shifted into a bearish regime. Not more to say there other than we'll see if it stabilizes. I mentioned the 14-day trial. Head over to chaikinanalytics.com/test drive to sign up. Thanks for being here. I'm with you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.